So next, I want to help you understand the basics of insurance. I'm no insurance expert, but I just kind of want to give you guys the tools to understand the lingo of the insurance broker, and certainly, the best way to understand is to have your insurance broker explain it to you. And if he or she cannot explain it to you well, then it might be a sign that they're not that strong of an insurance broker, right? So the key concepts I want to go over is that never skimp on insurance, right? A lot of the mom and pop owners, they buy the cheapest insurance policy because they're thinking too small, right? But if you have a good insurance policy, if there's a fire that burns down your apartment, and once you own enough apartment complexes, you will have an apartment that burns down. There might be like a grease fire, in unit 4, and it burns down your 26 unit apartment complex. And if you have a good insurance policy, you'll have a brand new insurance Class A apartment complex being rebuilt. If you have a cheap, insurance policy, then maybe you'll get back some money to cover the loan, but you'll have like some leftover money that's not enough to rebuild that apartment complex from the ground up. So that's why it's key to understand at least the basics. Two basic concepts that, in this lecture, to make sure that you're successful and that you protect your assets that you work so hard to acquire. So as some general rules of thumb, a good insurance policy is your first line of protection, right? Remember, insurance policy is your first line of protection, and do not be cheap when buying insurance. Do not be penny wise and pound foolish. All the mom and pop owners, they buy cheap insurance, right? Expect to pay 2 to 3 times the amount that the mom and pop owner pays, right? So for example, the 20 unit I just bought, the owner literally pays $5,000 for his insurance policy, which is actual cash value. I actually reached out to his insurance carrier, got some quotes, and I paid $10,000 for a replacement cost value insurance policy for the same 20 unit apartment complex. So this is what I mean, right? You're going to pay 2 to 3 times as much compared to the mom and pop, because I guarantee you 90% of the time the mom and pop have actual cash value, not replacement cost, and you want replacement cost, right? And most offering memorandums or OMs and performers quote the cheapest insurance policy. Like I said, I saw some performers where literally a 50 unit apartment complex had a $5,000 insurance policy for a Class A apartment complex. And I can tell you from personal experience, my 20 unit is 10,000 and my 26 unit is 17,000, and they're both less than $1 million, right? Like one is worth maybe 750, and the other one's worth 350, and this $4 million 50 unit apartment complex is $5,000. So that it's a lie on the performa and the offering memorandum. And when buying insurance, you always have an option to finance it with a little interest. It might be like, maybe like 5% or less, or they just might have a monthly payment plan, right? And I made my mistake where I lump summed my insurance year one, but they had an option where, I paid 2 months up front, and then the remaining 10 months, like 2 months as a down payment, and then the remaining 10 months was split out over 10 months, right? So you just take the payment and divide it by 10, and that's your monthly payment after that, to cover the cost of insurance. And that's a way to better leverage your money, and it never hurts to ask, right? Like sometimes the interest payment is not that much, and you're making more through your real estate, and you want a better leverage. And the lenders only care about getting their loan amount back, right? So they don't care that if your apartment complex burned. Like, well, I'll give my 26 unit as an example. If my 26 unit burned down, my loan is about $400,000. All the lender cares about is that they get their $400,000 back, and then whatever is left over, let's just say it's like 700,000, I get $300,000 back. I cannot build a 26 unit apartment complex for $300,000. The lender is happy, they don't care, right? They got their loan money back, and I'm stuck with $300,000 in a pile of ashes, right? So a lot of times what the lender quotes you for their loan amount requirements, it's the minimum, right? So that's why you have to know the basics of insurance so that you'll buy a good insurance policy that gives you a replacement cost. So if your apartment burns down, you're actually getting a brand new apartment complex, right? So in a sick way, if tragedy strikes and your apartment burns down, you'll actually rebuild a brand new apartment in a couple years, and they'll still pay you that monthly rent that you're supposed to be getting, and also maybe cover the cost to relocate your tenants, right? So everyone wins, right? The tenant gets relocated to a nice apartment or a hotel, and you're still getting your monthly income, and you're not dealing with tenants immediately, right? You're just dealing with the contractors that rebuild everything from the ground up, and when you're all done, you get a brand new A-class apartment complex, and you start over C-class, right? So that's why I said don't skimp on your insurance. So why good insurance is key is because, like you said, a grease fire in Unit 4 can burn down your entire 20-unit apartment complex, right? You might think this may never happen to me, but if you own real estate long enough, it just takes one fire, and that'll ruin your experience forever for investing in real estate, right? Um, And the owner with a good replacement value insurance policy will have enough money to build from the ground up a brand new A-class 20-unit apartment complex. Those paid all the missed rents while the apartment was under construction, so it's even less stressful, right? You're not even dealing with tenants anymore, and you're still collecting the rents, and all tenants can be temporarily relocated to a hotel or another apartment while the apartment is under construction at no cost to them, right? Versus if you have a bad actual cash value insurance policy, maybe you had enough money to pay back the loan and maybe enough to rebuild 5 units out of the 20, and you weren't paid the missed rents, right? So this is why good insurance is key, and I hope this example really hits home as to why you should buy a good insurance policy, right? So for actual cash value, the actual definition is a depreciated amount and will only pay for the remaining value of the damaged property. So as an example, if a roof was replaced in 2012 and you assume the roof has a 30-year life expectancy and you make a claim in 2022, 10 years later, and you have a $5,000 deductible, right? So the cost to replace the roof is $40,000. The remaining life of the roof is 20 years or 66%. At that point, with actual cash value, you'll get only 66% of the cost of the new roof minus your deductible, right? So you take 40,000 times it by 0.66, you minus 5,000. So your actual cash value, the lender will only cover about 21,000, right? And most owners buy the actual cash value if they're choosing the cheapest quote, right? So all insurance brokers will always give me replacement costs, always replacement costs. So, but this is just an example to illustrate why actual cash value is not strong, right? Like with 21,000, it's not going to cover your whole roof, right? Versus replacement cost, I'll get the full $40,000, save me $19,000, and I get a brand new roof. So with replacement cost, it will pay you up to the limit to build back what you had, whether new or old, minus the deductible, right? So you go back to that same example. Roof replaced in 2012. The roof has a 30-year life expectancy. You have a claim in 2022 for roof damage and a same deductible of $5,000. Cost to replace the roof is $40,000. Then basically, the insurance company will pay $35,000, right? So replacement cost insurance is always more costly, but always buy replacement cost insurance, and you will know that your asset's protected, and if it burns down, and like I said, you own apartments long enough, you will experience this, and you will not regret it, if you bought replacement cost insurance and when you're dealing with a burned down apartment complex, right? So this is why I always buy replacement cost insurance. If you take anything from this lecture, replacement cost insurance, always buy that. So for replacement cost, it takes into consideration building a brand new apartment complex from the ground up on a dollar per square foot basis in present day cost. Remember, building an apartment in present day in 2022 is way more expensive, way more regulations, way more requirements compared to building an apartment complex back in 2002 due to higher standards, stricter codes, increased labor costs, increased material costs. So yeah, if the building is about 15,600 square foot and it's $167 per square foot to build a brand new apartment complex, your replacement cost of insurance will be about $2.6 million, right? So your insurance broker will help guide you on the cost per square foot to rebuild, and they usually give you multiple quotes, right? They'll be like, all right, at the 150 per square foot versus 200 per square foot versus 250 per square foot, and maybe you can pick the one that gives you the most coverage, but the cost doesn't go up that much more, right? And they'll help kind of guide you, and you can really customize it. You can be like, I want $185 per square foot. So, you can always talk to your insurance broker. You can talk to a contractor and say, hey, well, hey, if this had to burn down from the ground up, what's the cost per square foot to rebuild a brand new apartment complex? And you can use that as a reference when shopping for your replacement cost insurance. Once again, to reiterate this point, actual cash value versus replacement cost. If you choose actual cash value, which is always a cheaper option, and your apartment burned down, you will just have enough money to pay back the remaining loan balance to your lender and come out of pocket for any additional money to rebuild your apartment complex. If you choose replacement costs, the lender will get back their money, plus you'll get a brand new apartment complex. A Class A brand new apartment complex. So this is why replacement cost insurance is so important and what you should buy, only buy. And remember, lenders only care to recover their loan amount, right? They will provide you with a minimum insurance amount, and that amount usually just covers their loan amount. So if this apartment burned down, the lender gets their money, and they don't care what happens after that, right? They get their loan amount. They don't care if it's a pile of ashes, if you can rebuild all your units, if you can rebuild half your units. They don't care, right? They just don't care about getting their loan amount, and that's about it. So just know that whatever the lender requires you, that's the minimum, the bare minimum. So you must always go a little bit higher, from my experience, and get the replacement costs on a per square foot basis. And as prices go up to build apartment complexes, your replacement cost should be going up as well, right? So if you double the value of your apartment complex, then you must, reassess your insurance needs for replacement costs and increase it. And lastly, you must assess your insurance policy annually. Maybe you can get a cheaper replacement cost policy. Maybe you can bundle, like if you own 5 apartment complexes, you can bundle all 5, and maybe they'll give you a discount, because if you decrease your expense, you increase your NOI, you'll increase your value, right? And sometimes if you significantly added value to your apartment complex, like you forced depreciation from 1 to 2 million, consider increasing your insurance policy coverage. And most investors forget this step as they force appreciation, because they're just so focused on the value add that they forget that, oh wow, I doubled the value, maybe I should get some more insurance, right? So like you said, it's your first line of defense. And buying apartments is playing offense and getting cash flow, but preserving your assets and playing defense, and the number one is insurance.